What up, everybody? Back is Zach with another episode of Journey to $0. And actually, as requested on Twitter and YouTube, you guys want me to make an extra video this weekend on my current positions, apparently. And hopefully next week I can make a video on the Xiaopeng store. But we will see if that's actually going to happen or not. Test drive those Xiaopengs. Anyways, I want to go ahead and share this screen real quick and just go over my current positions. Make sure that it's sharing. Okay, cool. So last week we actually did pretty well, up 7% overall, that's a little bit surprising, but I mean the power of the Soxel, really, it's what it's all about. But overall, we're down for the month, I expect, but just a little bit. It's not that bad. It could be a lot worse, but nevertheless, yeah. And also my stock did a lot better last week than my options, but hey, that's what happens when you're flat. And that's what I always try to tell you guys, but hey, this is not a video for that. This is a video specifically for my positions, since all you guys must be so curious. But anyways, current balance is the market value at least is 620, or sorry, the market value is actually 726 and the net account value is 628. Yeah, I do have about 97 in margin right now, which that's what happens when you're buying the dip. But and if it keeps dipping, we're going to keep buying. I expect I will probably go double or triple down on my ARC leaps this coming week, and we'll see how that goes. But yeah, but once the dip is over with, then I'll definitely start raising capital and put it into other things. I mean, probably with ARC X coming out this week, probably will be increasing this a little bit. I don't want to sell off my Soxel or anything right now, but towards summer, end of summer, then I will be doing a whole rebalance, I'm pretty sure. Trying to get past on most of my positions the 12 months so I can save in the taxes. You know what I mean, those capital gains taxes. But nevertheless, let's just start it in alphabetical order. First, we'll do the options. Yeah, so first is ARC G. I actually have the $95 December 17th, 2021 call. I have 6 of these right now. It's down 53%, which is kind of a lot. But if the market does go back up for this, if it just in general goes up, I mean, obviously it's taken a huge hit. But I expect it would recover relatively fast. So we'll have to keep watch that one and see how it goes overall. But like I said, I'm going to be doubling down on that one for sure. And I think I bought one last week. Overall, it's okay. It's bouncing right off the 180 day. I'm not too worried about it, but usually I would be. But just because it's a really long term, I still have until December this year. So technically, it's not a leap because ARCG doesn't have leaps. Yeah, I will be doubling down on this one. All is not lost. And yeah, and then I have the ARCG. I have 100 comments, which I'm also down a little bit on, and I don't plan on getting more of those. Although I do have 100, so I might be selling some covered calls on it, just to lower my cost basis. We'll see if it makes sense. And then the next one is ARC K, $145 January 20th, 2023. So these are a lot longer away. These aren't doing so bad. Only down 34%. Was okay last week. Bounced up a little bit off the 180 day, but I mean, obviously you see the up and the down, this similar theme here going on for a lot of the ARCs. So it could be better, but now that it's down on the 180 day again, I feel okay to start buying some more, which I probably will get one of each on Monday, Tuesday. We'll see how it goes. But overall, that's the worst by far is my ARC leaps. But that's what happens. The leaps during a period like this are not going to be doing, or not just leaps, but options in general. That's why I always told you guys to sell your options. Don't cut those little ones. Just double down on the longer term ones, the ones that you have high conviction for, because nobody knows what type of roller coaster we're gonna have to go on during these type of dips. But then yeah, I do have 100 commons of the ARC K as well. Those are actually up. I bought those pretty cheap, so I'm making some money on that. So overall, I mean, it's more or less I'm making money. Down 21 on the options, up 25 on the commons. So I mean, it's not so bad. The ARC G is definitely worse, but that one is more volatile because it is the ARC G. After all, it's the genomic play. Anyways, then the ARC W one I really like. I have Two, I have the options leaps for the $160 17th of December, so that's the same as the ARC-G. So technically they're not leaps, but I probably will get one more of those. And I expect a couple of good weeks of ARC, and these could probably start breaking even, and then I'll reconsider what I'm going to do. I would definitely reduce the position size at least by half once they do start breaking even. Once, or if one of those at least. And then I have 30 of these random ARC-W shares, which I was thinking about selling those when I was up like 3 or 4%, but I held on to them, so they're down a little bit right now. But it's been a pretty tough last couple of weeks for ARC. I mean, it's just a reoccurring theme here. So those, definitely the ARC, it's the worst that I'm in right now. The FLGT, this is the vertical spread that I have. I'm down 19% on that. I'm not too worried about it right now, although once, and this is the genetic play. It's pretty low in terms of my buy zone. It's playing around with the cut a little bit right now, so I'm starting to get a little bit concerned. But we're gonna see how Monday does for it, and overall, I think it will be fine here. Hopefully, it gets up past that 50-day moving average again. So we're down a little bit on that one, and this is not a big position for me. So overall, not so bad here. I'm only down $66 on it, and that's what I do with the high risk ones. I only got one of these. Yeah, sure, I could buy another one, dollar cost average into it more, but you know, if we're trading sideways a little bit longer, I don't really want to do that. So hopefully we come out on the other side and see some rainbows, butterflies, and stuff like that. But yeah. And then the XLK, these are the hedges that I have, so that's not doing very well at all. But these are actually puts in January 2022. But if you were with me long enough, following my journey, then you wouldn't know about these. Those didn't do what I thought that they would. So, hey, it is what it is. So yeah, I guess I could sell them and get a couple $1,000 back and probably buy ARC-X with it, but we'll see. I mean, if there is a really, and this is basically an insurance for a really big tech crash, just one of these smaller dips that we have recently had. I mean, maybe to some of you guys think this is big, but I think that there could be a much bigger one. I don't know if it's going to be later this year, next year, but I think it's coming. Not necessarily anytime soon. So this is just more of like an insurance against a really big one. I'm talking about the NASDAQ losing 30% type of thing. But we'll see overall how that goes. Anyways, the next one on the list is going to be ARC-F, and that's going to be the last of my ARCs. This is a January 2023 call. $54 strike, down 41% on that. But overall, I'm not really worried about it. I mean, these are obviously going to be pretty volatile. ARC in general could swing hundreds of percent within a year. You know, it's down. All of them are down 30%. So the leaps and the options are obviously going to be even more volatile. So I'm not really too worried about it. I will dollar cost average. I'll bring my average down. I still have some money I can do that with, so I'm not so worried overall. But yeah, once those do start breaking even a little bit, which I think will probably be in the next week or two, I'll cut it all by half. Probably pull out $40,000-$50,000 out of those positions, and also maybe even sell the ARC-W 30 random shares that I have, and put it into ARC-X or maybe Buzz, something like that. But anyways, other than the ARC-F, I have these Apple calls, which you guys know I have only 6 contracts of them, also down quite a lot, but these are also leaps for January 2022. And $120 strike, so they're deep in the money. I'm not so worried about these either. I mean, it is Apple after all. Apple should be doing pretty fine. Let's go ahead and take a look at the chart, but I mean, everybody probably is familiar. It's up a little bit on Friday. So yeah, it's been trading flat. That's just how it is. We're getting killed because we're flat. And the ARC is like a rainbow the last month, but it is what it is. Just how it is going to be for now, but eventually I think Apple's going to hit $180 and all is going to be great for everybody. But yeah, and then moving on, AMC, I only have 10 of these. Those I got for free. The Roblox, but yeah, I guess I'll keep the AMC, whatever. It's only 10 shares anyways. Roblox, I only have 10. I'm down. I bought it at $750, so I'm down a little bit. We'll see how it goes. I plan on just holding that. I'm not really interested in dollar cost averaging in on Roblox. It's an interesting company. I did a lot of DD on it, and I even played the game. I was live streaming it. It was fun, but not really for me. But hey, if the kids like it these days, then I'll buy a little bit of it. But yeah, not planning on doing anything with that. Just gonna hold it. OGIG is really interesting. I would love to buy more of this, and I probably will actually. Maybe once I sell some more of my ARK, I will probably buy more OGIG. But that's the Global Internet Giant ETF, and I'm down a little bit. These are just commons, 25. I might get 25 more tomorrow or whatever. Yeah, but this is all overall. I love OGIG, and I want some more of it. Right now, I barely have any of it, but I just want to buy it slowly by slowly, and especially in the summertime when I'm able to rebalance my portfolio more to save on the taxes. At least it'll be after the summer. Yeah, we'll think about it. Yeah, it'd probably be midsummer actually. But we'll be getting more of that, and then as well as the SPAC X, which is this is the SPAC ETF. I'm almost breaking even on that. I'm almost down 1%. I might buy some more. And remember, the OGIG and the SPAC X and the Buzz and the VACQ and the Pershing, that's what we're about to talk about here. All of these were the ones that I started buying during this dip. So I'm not doing so bad on them. Like I said, the SPAC X is down one and a third. Buzz, I'm actually up 1 and 1 and 3/4, 1.74%. It's all right, but I'm gonna buy more of those, especially Buzz. I bought that one at a pretty good point here, and I just did the report on this one, but I bought it down here, so that's really great, I think. And I'd like to buy some more, to be honest with you. Probably will just go ahead and set a limit order right after this video. But we'll be trading on Twitter later today, guys, so go ahead and smash that like button no matter what day this is for you. I'm probably going to be trading on Twitter and might even do a live stream. So go ahead and subscribe, smash the like button, and follow me on Twitter. I really appreciate that. But yeah, the next one is VACQ. I'm down 6% on that one. Overall, it's not much. I only have 75 shares of it. I do want to buy some more. For sure on this one. Vector acquisition. Also, there is another good one. Pershing. Yep, that's right. Pershing is down 7%. This is the Bill Ackman SPAC. So yeah, I think could be an interesting time, although it's definitely getting killed. So I might wait a little bit longer before I buy any more of it. I've already got 75 shares. I don't need so many of these, to be honest with you. It's not my favorite play, and it's also a SPAC. I prefer to put the money from this one into the SPAC X ETF, to be honest with you. But I'm not going to sell it or anything like that. But it could be interesting. And then I have the ZENGA. That was a free stock that I got that I didn't sell yet. Print, the 3D printing ETF that was overseen by ARK Invest. I'm down a little bit on that, but I only have 125 shares. I've been buying this during the dip as well, so I'm going to keep buying it if I need to. So yeah, I'm not sweating this at all. We'll keep buying it during this dip and ride. These are going to be the long-term holds, like the SPAC X, the Buzz, the OGIG, the VACQ, and the Pershing is shorter-term play. But print for sure. I mean, I'm going to be holding that for a while. I really like it. 3D printing is pretty cool, right? AGIG, nothing special, free stock. ADT, free stock. I'm probably going to sell some of these. The Ford, I have 13 shares of Ford. That was actually free stock. That was probably the best one that I got. I really appreciate Weeple. Guys, if you don't know, Weeple gives away quite a lot of free stock. Not only do they give you 2, 3, 4 when you sign up, link in the description. Support the channel, guys, please. And yeah, I mean, they have some contests and stuff. Like right now, they're doing that trading card competition. So I mean, they always do stuff, and I've seen people get Google and Facebook. They literally pull these. So that's really awesome. So yeah, go ahead and hit that link in the description. If you don't already have a Weeble, go ahead and sign up and deposit $100. You're gonna get 2 free stocks anyways. You might as well. It could be Ford, could be AMC. You see. Anyways, and then next gets into my leveraged ETFs. UPRO is the S&P 500 3X Bull ETF. I'm up 100% on that, guys. Yeah, it's done pretty well for me. I've got more than 500 shares, 45K in it. The UDOW is the Dow Jones 3X. That one's done even better. Now the Dow Jones is doing pretty well if you haven't noticed. So that's really saved my portfolio. Even though I do like to say, I do like to consider my portfolio is a tech heavy, innovation heavy, because I do have all of the ARCs. But overall, I have a lot of index funds too. They're just leveraged because I think the index funds non-leveraged are pretty boring. That's just my opinion, and I don't see any risks with it. I did a case study. There is no drag. At least there hasn't been for the past year. Of course, that might change, so keep that in mind. But anyways, the UDAL, I'm up 106%. I've got 94K on in it. And actually, the reason I have half of in the S&P 3X is because there's another one. SPXL is another one. I have another 45. So it's the 45 plus 45. Literally, it's the same. 45.7 thousand, 45.7 thousand. So overall, and those are exactly the same, just managed by different companies. S&P 500 3X Bull ETF. So overall, I've got 90, a little more than 90 in it. S&P 500 Bull, and the Dow Jones S&P, the Dow Jones 3X Bull. I also have almost 95 in it. And then the Nasdaq TQQQ, I only have 92, and that's because it's not done as well than the other ones, because right now the Nasdaq is down actually. But I'm still up almost 95%. TECL, I'm up 94%. I've got 97K in that one. So it's really interesting, and so basically what I did there okay, sorry, last one. My favorite is the SOXL. I have 183,000 in that one. And yes, I know I need to rebalance, and I will be doing that soon. I always keep talking about that, but hey, I'm trying to save in the taxes, you know what I mean? But I'm up 230 on that, 230%. That one's just awesome. Now you know why it's my favorite. I've almost got 5,000 shares of it. I'm probably going to make it 5,000 even coming up here pretty soon. But, yeah, so basically what I did with all of these bull ETFs, I did a little experiment when I first bought them. SOXL, SPXL, TECL, TQQQ, UDAO, and UPRO. I put, let's see, how much did I put? 45K into every single one. Well, it's almost 50, 52. And then, of course, the UPRO and SPXL, those are both S&P 500, so I put 22 and 22. So totally it was around 45, 50 in every single one. And as you can see, now after about a year, I think, of course, I dollar cost averaged through the COVID dip, so less than a year, really, on average, I would say, because I was dollar cost averaging. Even in the September dip last year, I was buying. Yeah. So I cannot really say exactly 365 days or anything like that. But, and they're doing well. Can't say that at least. And so I bought the exact same amount, as you can see. And so see how they perform. Obviously, the winner is SOXL. 230% compared to around 100 each. So, some is 108, some is 106, some is 105, 94, 93. But the SOXL is just done so much better. And that's because there's a shortage of semiconductors. And now, in this week, I guarantee semiconductors are going to blow up, because in the news is more and more about this shortage of semiconductors. It's really just such an easy buy, though. That's just my opinion, guys. Don't listen to me, please. Please, I would prefer if you guys don't listen to me. Just watch my videos for entertainment. Don't actually take the advice, though. You know what I mean? I would feel great about that. But yeah, I'm just kidding. Anyways, oh yeah, I forgot about the ArcQ, the robotic one. I have 150 shares of that. I've done 40% on it. That one's probably done the best of all of my ARCs, which is odd. I thought it would be ARC-K, but during the dip, this one did better than the other ones. But it's kind of rainbowish, but I didn't have any options on that. I just bought the shares really cheap, to be honest with you. So yeah, got those 150 shares. I probably should do something with that, to be honest with you. I didn't put much money into it compared to my 3X leveraged ETFs. So that's why I would consider my portfolio relatively safe. I mean, obviously, because a lot of it's in the index funds, although they are 3X and 3X leveraged, index ETFs. But, overall, I never really felt like I was taking so much of a risk. And as far as my portfolio goes, options are only 26,000. Compared to stocks are almost 700. Of course, the margin is included in that. But as you can see, there's a big difference. I don't do too many risky things because I don't like to lose money. And if I do lose money, I like to minimize the losses and protect my capital. Very first, number one rule is protect capital. You know, and I'm trying to retire. I'm not trying to YOLO, to be honest with you. And yeah, the last but not least is O, which is the Realty Income. This is a pretty good dividend paying one. There might be some other ones that are better, but I personally like this one. It pays dividends every month. Not that, you know, with 20, I only got 29,000 in it. Not that that's gonna pay anything significant every month. I think I might make $100 a month on it, but that's not really the point. So as I get older and older towards retirement age, 50, 60, whatever, I'm going to be rebalancing every year, less out of the riskier stocks, more into the O, the safer dividend, and maybe not just O, maybe could do a AMT. I do like AMT. REITs, I'm pretty interested. Iron Mountain. Oh, eyelash in my eye. Iron Mountain, AMT, CCI, Crown Castle. I think AMT is pretty interesting, in my opinion. The dividend is 2% only, but it's doing pretty. If you go out on the month, it's doing pretty well since since '98. So I mean, it just depends on how you look at it. Crown Castle is also pretty interesting. Dividend yield is 3%, also doing pretty good since '98. And if you looked at O, it's also doing fine. And the dividend yield is 4.39%, so it's also pretty good. Iron Mountain here, it's probably a little bit better. Yeah, dividend is 6.64. Also doing good. But a lot of those pay per quarter, and then I could compound it every month actually, especially if you have DRIP, dividend reinvestment program. Just use your dividends to keep buying more. I mean, and if you don't have fractional shares, just save up the money and do it. I mean, to be honest with you, I'll take the money from like 6 months that I make from the dividends and just buy more O. But yeah, I might split up between those. But anyways, guys, I'm probably wasting your time now because I don't have those. The point of this video was just to show you my current positions, and those are my current positions. So anyways, guys, I appreciate you once again. Hit that like button, subscribe. Let me know what you want to see next. I can do the Xpeng, the XPEV, the Xiaopeng car. I can go test drive it over at the Xiaopeng store. Let me know if you want to do that. Comment. Let me know if you want to do maybe some of my backstory, like how I got started in investing, or maybe you just want some tutorials on some wheel strategy or iron condor tutorials or whatever you guys want. Let me know in the comment section. And anyways, guys, I will see you on the other side. Peace